The market is currently stuck. Hello, ladies and gentlemen, and welcome back. Today, we discuss the coiling of these markets around the world and similar situations that we've found ourselves in 2022 and how they've played out. We know that big news is coming. We also know that there could be a little bit of cheer coming into Thanksgiving. So we need to take all of this into consideration and look at stocks, commodities, and cryptos right now. Well, welcome back everybody to the Daily Show. We'll be talking about the macro data, the lead indicators, and of course the key levels that you need to be watching right now in the markets. But ahead of the FOMC statement, what do we know? Well, historically, the Fed has generally pivoted before peak inflation. Everybody wants to bring up the idea that the Fed's pivoting. The question is it even good? Well, in another video later on this week, we'll be taking a look at whether Fed pivots have historically been very positive for markets. In short, no, they haven't. Also, we tend to find that when the Fed does pivot, recessions happen after that fact. So they're pivoting because they smell the recession and they're trying to support the economy into it. Do the Fed usually act quickly? Not really. They're usually pretty slow. So 2022 probably won't be much different, but we do still expect a very high chance of the recession word being used heavily at the start of 2023, probably in the first quarter. So where do we find ourselves now? Regardless of what we believe might happen in the future, what is the here and now? Well, the problem is that we're ahead of Thanksgiving, and that might be a great thing. Of course, a lot of people hopefully will be celebrating with their families, but at the same time, we find ourselves at a bit of a crisis point. We're in a coiling market, and we're only a few days away now from Thanksgiving. And traditionally, Thanksgiving and every other kind of holiday event in the US has been a positive buying experience. We've now experienced one day of that occurring. If you're interested in finding out more as well about our thoughts coming into the Wednesday session as we see the Asian and the European sessions move through, remember to come and join us at FX Evolution, spelt correctly. Remember, there are some imposters out there. And follow our Twitter because we will be posting up one of our private reports. And of course, we'll be posting that free to you guys that are following us on Twitter. So make sure to follow at FX Evolution if you're interested. So what's happening underneath the hood leading into this Thanksgiving event? Well, we had a big day for gold stocks and we had an incredible day as well for semiconductors. Now, I've been negative on both of these in a recent couple of days. Now, of course, I'm super positive on gold moving forward. Don't get me wrong. But I've been talking about this chance of maybe gold and semiconductors pulling back down a little bit here and then giving us better opportunities to get into them longer in the future. This was a pretty solid day for them. Staples, utilities, these types of defensive sectors, while they were up, were not the ones leading it. But let's take a step back and put the picture across the board. Still, what are the best sectors over the last 5 days of trade? Staples, XLP, utilities, and of course, healthcare. And yes, gold's also done relatively well. These are mostly defensive sectors, and they're still out in front as we lead into the FOMC statement and some other big bits of news. Well, just before we jump into the charts, everybody, and we take a look at the key levels that we should be watching right now, of course, we want to mention today's sponsor of the video, which is Tiger Brokers. Now, who doesn't love Black Friday? Yeah, it means deals, and I love a good deal. Well, luckily enough, Tiger Brokers have offered a big special for members of the FX Evolution community. If you're interested in opening an account with Tiger Brokers, you'll be able to and eligible for an extra 80 zip stocks along with a 50% off our Ultimate Masterclass. If you're interested in jumping that, all you need to do is you look at the description links down below. And yes, guess what? It's not just for the Australian and New Zealand audiences. US, Singapore, and other eligible countries around the world, you guys can get access to these special offers. It's Black Friday only, and of course, it is limited. Now, why would you potentially want to do this? Well, it's all got to do with having the platform features. We want to be able to make sure that whatever broker we go with, it gives us a value proposition. The good thing is we've been talking about Tiger for quite some time, from its level 1 data to its level 2 data to even this screen here, which allows us as traders and investors to have a specific special window. Some platforms don't allow you to have customization. If I want to add boxes for different time zones in the world, I can do so. If I want to add an order window, I can do so. If I want to look at quotations for tickers and options and live and all these things, I can do so in this platform. And of course, we also want our technical analysis in the middle with setting alerts. So remember, it's all about having the tools that allow us to become better traders and better investors. And if you get a couple of freebies in between, there's nothing wrong with that. So check out the limited offers down below in the description. So let's now take a look at the charts. What similarities are we seeing with other previous times? Well, in 2022, there's no doubt the VIX has been incredibly good at predicting potential highs in markets. Let's just load the SPX onto the chart here, which is the SP 500, and take a look at some of the periods of time where we've had a low VIX and what that's meant for the markets. Take a look at this. The VIX can be very, very handy, especially around 20, at helping us to predict or at least to figure out whether we're at a critical point. Here's the previous time we came to 20. Here's the times we've come to 35. Take a look at these. These have always correlated well with lows. And again, we've got lows here in these 35 level, and we've got lows here in the 35 level. So what's clear is that if the VIX is coming down to 20, which it's getting close to, it's now sitting just above like a 22, 21 and a half, that if it does get down here and we're still coiling around, or even if we break out above, we've got to consider that there may be some bears coming back into this market in a big way. That's what's happened so far in 2022. It also brings into that idea that when we go back through history and we think about 2008, 2009, we had a very similar period. A lot of VIX going towards 35, then it went down to 20, and then we saw an explosion of risk. A lot of people are talking about this, but still it's something that we consider. We know that 20 is a turning point for the VIX. We also know that we're only 1 and a bit points away from that now and how it's interacted. What about the option scenarios? What are we getting here? Well, we're getting a huge amount of fluctuation. We're seeing huge swings from people buying calls to people buying puts. These are the ways that we're seeing it. So overall, not too much to be discerned here from the put call ratio. We have had it down in the call side a few times, which means that lower amount of puts than calls, and that's what we want. If you're somebody that's bearish on this market, you wish to see tons of calls being entered into the system. If you're someone that's bullish, you want where it is right now and lots of puts being entered into the system. It's very important that we understand where options sit in the markets. And although these aren't the big weeks, there's still some stacking through into December, into the third week options expiration. What about yields? Well, what's going on with yields? Not that much. Actually, yields stayed relatively pretty much the same. This is December yield sitting at 4.7. We know that the Fed terminal rate at the moment sits around 5% between somewhere in April into September, with potentially also March being the high. We also know that the 2-year yield is sitting stable ahead of the FOMC statement. Notice it looks like a head and shoulders. The left shoulder, the head, the right shoulder, and of course the neckline. Effectively, this is a key point in the markets, there's no doubt. And if the market does break down here, we've got to consider, did we just see peak inflation? Have we now seen a turning point for the markets? This is what a lot of people expect, though I am still surprised that we're going up and that the yields haven't dropped anywhere near as much as I thought they would have by now. What about the bonds market? Does the bonds market feel positive? It did like the last session, and there's no doubt that corporate bonds have had a lot of risk appetite on them over the last couple of weeks. If we look at TLT, it's another one that's had some strong moves on it in the last couple of weeks, and it's back now at a critical zone where it previously came to. And as we know, if we look through history and we go over to a weekly chart, a previous point of support, which could now become resistance. So again, critical ahead of very big news with the FOMC statement. Did the Fed tell us any signs of a pivot? Show us anything of interest in there? Maybe there's nothing in that report. We'll find out. And that's what the market's waiting for. It's waiting for the next bit of information so that it can make the big move. What about the US dollar? Is that telling us anything? Well, we speculated in the last couple of sessions that the US dollar breakout past this 107.20 was a big deal. I still think it is a big deal. It's come off the demand. We've rallied up and then we're selling off. That was expected. The sell-off in DXY, of course, should push the stock market a little bit higher, which it did. And we find ourselves at a very critical point. Now, did the dollar index come back enough? It's at what we would call, again, a critical resistance, becomes support role reversal area. Most traditional support and resistance traders would like this level very much. I would like it to come a little bit further down into these wicks, ideally, and then find strength. We'll talk about that in a second. But either way, it's done a first kind of time frame change of trend. These are the types of things that we do wish to see if we believe there's a potential chance of DXY strength. Why did it short? Some structure in here, previous support, becoming resistance, of course. Anywhere in here is where the DXY may strengthen. Now, where could the DXY weaken heavily? Somewhere around that 110.50 certainly opens up great shorts for dollar index weakness. And I would just like to see it get up there. Remember, the demand down here was met by huge pressure. This could be the signs, along with that defensive nature of the market currently in this coil, that maybe it still wants to go down or will go down very soon in the future. Even if we get a rally here in markets, remember the stock market is about to hit critical levels. Let's have a look at the euro. What's it doing? It's reacting to that last area we talked about. So we've seen a fall through to a new low on the euro. It's rallied up, and at this point, it's finding some weakness. Now, either around this 103.25 level or even around up here, which would be in line with, of course, the US dollar, 103 kind of 80, we expect potential weakness around these two zones. If bears are going to take control of this, they're going to do so here. And this will line up quite well with when we look at this stock market in just a few moments. So again, euro finding one of those critical potential sell areas, which just so happens to also be an interesting supply zone as well. The gold trade. Now, gold has come down considerably from where it was only a week ago. The previous daily close, pretty negative, obviously a very big compression candle. We're not quite in our key demands yet, which sit around 1710 and 1670. Those levels would be certainly key for finding further buy pressure. And we find ourselves at a interesting point for gold. I think it's a tough one to read here in the markets. You could go either way from this point. You could actually go towards bullish or bearish, but the trend is still down. And overall, there's still a potential sign of weakness. Why? That US dollar strength coming through over the next 24 to 48 hours, ideally. Let's move over to US oil. Now, this is where buyers certainly have stepped back in. Take a look at those wicks. Coming off these lows, taking out the stop losses there, hitting the demand. I've got to say I was pretty happy with this. This is a very nice pickup in terms of what's happening with oil. Let's go down to the 2 hour. If we get a strengthening of the US dollar, what would we expect for oil? Potentially a sell-off moving into some buyers. I'd like to see buyers recommit to oil around 77, 78 a barrel. And if that occurs somewhere in that area there, that would be the right move towards the bull side. This is, again, technicals. It's a concept. It's something that you need to have activation steps on to make sense of it really in the moment. But yeah, we can see here the previous supply. Of course, the market's hitting that level. This would make sense to potentially now short off or see some weakness. And that would be what we're looking for over the next couple of sessions. Let's move through to Tesla now. Now, Tesla is still incredibly weak. Whenever you look at this stock, I don't like what I see. Did it bounce? Sure, it went up 1.22%. That's pretty weak considering what happened on the market, which was up over 1% across the board. And as we saw, gold and commodities were really spearing ahead with that really strong move. But yeah, Tesla here, I could still see it weak and there's very little structure here. And in the previous video, I detailed AMD as being a similar scenario. Trading's about repetition. It's about replication, understanding very similar scenarios. Previously, we talked about this area here for AMD. I think we can all agree that was a super zone. But when that super zone was taken, although there were rallies, ultimately it came down into our structure. This is very similar to where we find ourselves in Tesla. And I just don't think the market's got confidence in it right now. If the market turns around, you may find that the stock will compress further into these prices. At least that's the current theory. You might call me a hater. Hey, the market's underneath. I just don't see huge strength here. You might say, okay, well, yes, there's resistance. There's a little bit of structure. I'm going to buy that. You could make a case for it, but of course, I don't know if it's the strongest case at this point. We'll continue to come back to Tesla, but for now, weakness is ensuing. And of course, if the weekly manages to hold down, this will be also very bearish for it. If it does a full reversal, nice bullish candle by the end of the week, okay, we can talk about that and we'll justify and change if necessary on those ones. Let's move over to semiconductors. So we certainly expected a little bit of weakness here on the rallies. The main reason was this island reversal, obviously a gap up with a gap down, and we saw rallies being quashed with sell demand. Now it's not broken through this level, so it's technically still live, but you'll notice a little island reversal in the opposite direction. It was a good day trade if you were looking for the buy actually from this. When it gapped up, nice little grab. Anyone that got it, well done to you. Realistically, still looks like there could be some weakness in overall semiconductors, but the next 24 hours may be incredibly key to this sector. It needs to kind of short pretty soon. Apple was something similar as well. We're looking for the signs of really big weakness. Apple here found a rally. Do we find a short? Well, we haven't got underneath 146. This is a level that we want to see taken out, kind of solidifying that this was a topping process and allowing Apple then to move down to fill potentially that CPI gap that's left behind only 2 weeks ago. I mean, it went up so heavily. What is this percentage-wise? Let's have a quick look here. So we're up about 11.48%, an incredibly strong stock with great price elasticity. Of course, weakness could fill that zone, and I think the weakness starts around this 146, something that I've got an alert. I believe it's worthwhile having on our charts. Let's move over to XLY, XLP. What's going on here? Well, we find that consumer discretionary was slightly beating consumer staples for the session. Still overall very weak. This shows us the American consumer. Remember, 1/3 of the America's kind of like overall GDP is really consumerism, 2/3 is services. So if we think about it that way, this shows us a bit of a representation of how the market perceives the American consumer. It's still sick. We like to see this recovering if we're truly in a market rally. That's at least the way I think about it. US 30 versus US 500. I like to think of this as the old economy versus the new economy. It was a okay day for the old economy. It actually wasn't the new economy outstripping. You can see here the Dow was slightly in front, or at least flatlining. So no real indications there. The DAX coming into some big euro news, which we'll talk about soon. We're in a supply zone, again, critical ahead of the news and a critical point for all the markets around the world. Will they short? A lot of people have been trying to short DAX and they're getting squeezed at this point by a dull market that's making a series of higher highs, but not by much. Let's now look at Exhibit A. We'll talk about the NASDAQ. Yeah, the NASDAQ's pretty weak. It found rally, which was awesome. But at the same time, it's well down from that 12,000 where we started to say, you know what, this is probably short at these zones. We've found strong buyers to sit around this 11.5. And if that level does get taken in the future, we've got to consider that we'll wipe off a lot of this CPI number. So this might be a very fast move should this get taken through. And that may push us down to the 11,000s, even the 10,800 zones. But on the surface, what do we see right now from something like the NASDAQ? Well, let's have a look at the 2 hour. Let's understand what's going on here. We still have overall a series of lower highs through the switch. To get above 11.8 would be a huge deal, I think, for the NASDAQ. So we'll set a little price alert for that should it happen. That will take out all of the supply that sits behind here. And you would think that pullback should be met by buy demand based on the current pattern. For now, though, NASDAQ's still looking weaker of the indices. Let's move over to the US 500. Now, we already know, just so we know this, that the US 500 is at the 61.8 fib pullback. Now, for anyone that's a first-time viewer of the channel, you may know that previous, or you may not know, that previous pullbacks have actually come back to these kind of golden pockets a few times this year in 2022. So it's why we're paying so much attention to this zone. It makes sense to coil here. It makes sense that the market is at a crisis point trying to figure out the next big move because we've seen it act as strong resistance before. Now, when we've usually had coils, news has been the catalyst that's pushed us through. And we have to be aware that if we get a new high here, the next logical conclusion is to push us towards a gap fill, which sits around 41.10. This is before the CPI number only a few months ago. And also the downward trend line, which has been the best indicator realistically this year of the tops of the stock market. So let's now break down the smaller timeframes. What happened exactly to us over the last 24 hours? Well, anyone part of the private community would know that I was at a point where I was like, you know what? I don't really like either side at this stage. And the main reason was because we had a doji, a wick, and we were potentially building a bull position, which I thought may be pinned by bears around this area. So both of these areas made some sense. The problem is we were kind of trapped, and we knew that the 3980 to the 4000 zone was where the bears may recommit to selling the position. And overall, this was kind of looking like on the smaller timeframes, it was trying to potentially place some buy trades. And that is what happened. If we actually look here at the last 24 hours, you'll notice the market came down early, sat down into this previous demand level and just found those buyers and pretty much ran for the rest of the session. Now we find ourselves at a crisis point. We have a high, we have kind of like a little low, we've got a higher high. Do we make a lower low? We're at weekly and daily level closes previously. This is still a pretty critical point, and the market kind of needs to make a decision. If it breaks through 4,000 to 4020, what becomes the conclusion? Well, we've got to start thinking about 4110 gap close, 4120, and these levels being the next bear short zone, and the bulls have full commitment to those levels. Maybe it happens even before Thanksgiving, who knows? Most likely though, the Friday would then rally and we would see, maybe a further rally through the Monday, followed by potentially some shorters coming back in. So for bears, the time is now. This is where we saw shorting before. This is where we've seen shorting in the past. This is a very critical zone to find bears again. Big rally, push through this area. There was no turning inside of here, no real weakness. It was just basically rally, 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 rally. Now will we see a turnaround? This is the critical point that we find ourselves in ahead of the FOMC and ahead of a little bit of news. Options doesn't really help us this week. If they were having their way, they would just say, okay, close the market, guys, between 400 and 390, and we will be incredibly happy with that. And that will, of course, make them the maximum amount of money. This is Wall Street, the composite man, the people that write these options in these markets. Bitcoin still looks pretty sick. So when we take a look at Bitcoin, we know based on our studies that we've usually seen 86 and 84%, and it's a little bit more than 77, probably ticked up to about 78 or 79% down as of the fall back into the 15,000s. But still, we're at this critical point here where Bitcoin is facing a crisis. Where do we find it in these points? Now, we've already detailed we wanted to see a new low. That's good. For buyers, actually, it's not bad that we saw a new low. Look where we find ourselves in with crypto. We basically come back to a fairly critical little supply zone. Let's take a look at this on the smaller timeframes here. So have we seen some nice pickups? Well, we've had a nice rally. It's coming into this area here, and it's tested it, and it's found some sellers, but it hasn't made a new low. 16,000 seems to be a bit of a fight zone, so we're going to put an alert there. If you're a seller, if you're a bear on these markets, you want to see weakness coming through the 16,000, then ideally something like that. If you're a buyer, under all circumstances, you really wish for this thing to close probably above about 16,400, 350. If that happens, you can be more committed towards maybe this was a false break to the downside, a max pain, if you want to call it that way, and potentially some rallies come through. These are, of course, very high risk style positions. They're not necessarily as well thought out and as well structured as you'd like, but you can clearly tell that there were orders placed here that led to the short. So if shorters are going to come back in, they need to do so around these periods. Otherwise, they enable positions to move back to things like 16,800, 17,000, and then we find out whether those real weaknesses come through. This is a fairly big switch, and it could be the beginning of something nice here for a Bitcoin rally, but we haven't seen the signs just yet. So we've been talking about news coming through. This is because we have all this European news, French flash services PMI, German, pound. Then we go into flash services PMI, 9:45 New York time for the US. And then we have the FOMC meeting minutes at 2 p.m. New York time. These are the big bits of news coming out. They will probably move the markets hopefully towards a direction where we get out of this trapped coiled range. And It could be as little as 24 hours away that we find that out. So as per usual, I want to say a big thank you to everybody for viewing the video. If you're interested in the Black Friday deals that Tiger Brokers are offering, you can check the description in the links down below. And then, of course, open an account there to get access to all of their special offers. And I just want to wish everybody out there, if we don't see you before, a special Thanksgiving. We hope you have a great time with your family. And we wanted to say a massive thank you for your viewership this year so far as we enter into the back end, the holiday period, and of course, some well-earned, hopefully, rest over the Christmas break very, very soon. We'll see you in the next video. Bye for now.